Ladies and gentlemen, good day and welcome to BCL Industries Limited Q2 H1 FY26 earnings conference call hosted by Go India Advisors. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on a touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Priya Singh from India Advisors. Thank you, and over to you, ma'am.
Thank you so much. Good afternoon, everybody, and welcome to BCL Industries Limited earnings conference call to discuss the Q2 and H1 FY26 results. We have on the call Mr. Kushal Mittal, Joint Managing Director, and Mr. Varun Gupta, Chief Executive Officer. We must remind you that the discussion on today's call may include certain forward-looking statements and therefore must be viewed in conjunction with the risks that the company may face. May I now request Mr. Kushal Mittal to take us through the company's business outlook and performance, subsequent to which we will open the floor for question and answers. Thank you, and over to you, sir.
Thank you, Priya. A warm welcome to everyone joining us today for BCL Industries Limited Quarter 2 and First Half FY26 earnings Concall. The results and the investor presentation have been uploaded on the stock exchange, and I hope you've had the chance to go through them. At the outset, I would like to note that operational updates for BCL Industries are presented on a consolidated basis, covering the performance of Swaksha Distillery Limited, in which BCL holds 75% stake, and Goel Distillery Private Limited, a wholly owned subsidiary of the company. Before we move to the operational and financial highlights, I would like to begin with a very important announcement. It gives me great pleasure to formally introduce Mr. Varun Gupta, who has joined BCL as Chief Executive Officer. He brings extensive experience across leadership roles and diverse industries. With his onboarding, BCL has further strengthened its leadership team. His strategic insight and management expertise will play an important role in driving the next phase of growth. I now invite Mr. Gupta to share a few words.
Thank you, Kushalji. Hello, everyone. I'm delighted to be a part of BCL Industries at this pivotal stage in its growth journey. The company has built a strong foundation through operational excellence, strategic diversification, and disciplined execution. As we move forward, my priority will be to work closely with the leadership team to build on this momentum, enhance performance, and drive sustainable growth to create long-term value for all our stakeholders. I now hand it back to Kushalji to take you through the highlights of the quarter.
Thank you. The journey of BCL Industries has been marked by resilience, adaptability, and operational strength. As a part of our diversification strategy, we have steadily pivoted towards the distillery business, which has now emerged as our core growth engine. Our biggest strength lies in our state-of-the-art facility that allows us to operate on multiple grain-based feedstocks while seamlessly switching between ethanol and ENA. Although the recent OMC allocation has been lower than expected, BCL will now try to maximize both ENA and IMIL sales in the market to try to make up for the loss of revenue due to the low allocation of ethanol. Our margins remain stable, reflecting the strength of our operating model and the flexibility of our product mix. Although ethanol demand remained rather flat during the period due to industry-wide oversupply, our ability to balance production between ethanol and ENA helped maintain stable operations and margins. During the ethanol year 24-25, oil marketing companies have received 904 crore liters of ethanol against contracted 1,131 crore liters. Grain-based ethanol accounted close to 600 crore liters on a pan-India level. With grain emerging as the primary contributor to the ethanol supply, the continued focus on grain-based ethanol fares well for BCL Industries Limited. ENA has continued to deliver a strong performance, supported by strong demand from our PML portfolio and steady offtake from leading bottlers across the nation. We have now fully exited the edible oil segment, with liquidation of remaining inventory expected to conclude by the end of the financial year. Our maize oil extraction and refinery segment continues to perform well and is expected to sustain its momentum in second half FY26. Let me now share an update of the ongoing projects. The 150 KLPD ethanol expansion at Bathinda is progressing well and is in advanced stage, with completion on track for Q4 FY26. The paddy straw-based boiler at our Sangat distillery is also moving as planned and is expected to be operational around the same time. BCL has long been a pioneer in using agricultural waste as fuel, and we already operate a 60-ton per hour paddy boiler. Building on this foundation, we will be commissioning an additional 55-ton boiler alongside with it. Together, these two boilers will meet the demand and energy requirements for our 550 KLPD plant at Bathinda. The maize oil extraction unit at Bathinda was commissioned in the latter half of Q1 and the same for Swaksha is on track to be commissioned in Q4 of this financial year. Looking ahead, we are consolidating our presence in IMIL segment and have introduced a Punjab Special Whiskey in glass bottle in Q3 FY26 as a premium IMIL offering. Additionally, we are preparing to enter the IMFL value segment within the next 2 years, with initial plans to launch products in vodka and whiskey categories. Our focus remains steadfast on maintaining stable margins and translating operational efficiency into superior shareholder returns, supported by a continued emphasis on process discipline, raw material efficiency, and energy optimization. Let me now take you through key operational and financial highlights for the first half. Our distillery operations continue to deliver steady growth during the period. Ethanol volumes stood at 107,211 KL compared to 1,919 KL in the corresponding first half of previous financial year. ENA volumes increased to 20,089 KL from 11,206 KL in the corresponding period last year. On the financial front, ethanol revenue for the first half stood at 727 crores compared to 719 crores in first half of last year, while ENA revenue grew sharply to 139 crores from 80 crores last year. EBITDA for the distillery segment came in at 113 crores compared to 102 crores in the first half of last year, reflecting a growth of around 11% with margins stable around 10.5%. In the refinery segment, revenue for first half stood at 486 crores compared to 452 crores in the first half of last year, marking a growth of 7.5% year-on-year. EBITDA improved to 13 crores from 9.3 crores. On a consolidated basis, total revenue in the first half increased to 1,544 crores from 1,409 crores, registering a growth of 10%. Year-on-year EBITDA for the period stood at rupees 125 crores compared to rupees 113 crores last year, reflecting a growth of 11%, with margins maintained at healthy 8.1% versus 8% in the previous year. Profit after tax grew to 65 crores compared to 54 crores in first half of FY25, marking a growth of around 20%. That concludes my updates. You can now open the floor for question and answer. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Bala Murali Krishna from Oman Investment Advisors. Please go ahead.
Hi, Kushal. Good evening. So the first question is regarding the maize prices. So what is the maize price last quarter and how it is shaping up? So how I think it's ranging around 18 rupees per kg. So how it will help boost the margins?
Thank you. So, actually, the real prices, I'm not aware if they're around 18 rupees. The prices we are getting are around 23, landed at our units. That's the price we are getting for maize. And in previous quarter, maybe it was 1 to 2 rupees more than that. But now with the mandate that 40% of our supplies have to be through FCI rice, overall, in the blended margins, I don't think there will be that big of a positive impact since now it's mandatory for us to restrict our maize-based ethanol to maximum 60%.
Okay, understood. But there is a substantial drop in the maize prices since September starting. So from the 24-25 rupees to it went to 18 rupees, and in some areas it's selling purchase price is less than this 18 rupees because of this ethanol FCI rice mandate and less demand for the maize. So, but I think we are working on the forward contracted, so we are not able to see that reflection in our numbers or in purchase price. So how long this forward contracts are running, and when we can some maize at the cheaper price?
No, I'd like to clarify that as per our knowledge of the market, where we continue to buy and procure grains daily, the prices landed on a factory level are not rupees 18. Maybe they could be rupees 18 for heavily damaged material or material with very high moisture, but for us, that's not the case.
Okay, fine, understood. So on the short-term borrowing side, I think it's increased substantially by more than 100 crores by September end. So what is the reason for that? We are not going to commission 150 KLPD soon, so I don't think that it is the raw material cost. So could you please clarify?
No, we were last quarter, ending of last quarter, we were sitting on a significant stock of raw material. Since we had made a decision to procure quite heavily during the last harvest, looking at the prices then. The increase is due to an increase in the raw material being held up on our premises. And ever since, the stock has been coming down, so the working capital has been decreasing.
So on the distillery front, so the allocation is very less for all distilleries. So I think we have got around 50 to 60% of allocation. So 20% will be from DDGS or some other products. So what is the plan for the remaining 30% of balance capacity? Are we going to produce the complete ENA, or we are waiting for some other cycle allocations going forward?
See, yes, agreed, the allocation has been low. That is a challenge for us as a company. Although we are expecting another cycle sometime in the future, we don't think it will be significant enough to increase our allocation significantly. So hence the company will now have to focus on ENA, which since we are expecting a supply to increase in the market in the coming months, will be a little challenging and could impact our margins adversely. I just want to be transparent there, but we will have to now focus towards ENA.
Okay, understood. So in that case, so the 150 KLPD which is coming on stream in Q4, and in future we have gold distillery, so the utilization levels of these capacities would be a little bit tough even in future, because some other distilleries also coming on stream. So allocation going forward would be in the similar range, right?
Unless blending is to increase, yes, there could be some challenges in the coming years, in the coming times. But of course, we at BCL have been ready for this, whether that is with our paddy straw-based boiler, whether that is with our maize oil extraction or so we have been ready for the competition. And with the flexibility between ENA and ethanol, we will continue to try and achieve as much capacity utilization as possible. But with that, unless there is a revision in the blending rates or the introduction of flex fuel vehicles, for the time being, we have decided to put the Gold Distillery project on hold.
Oh, okay. That's a conscious decision. Lastly, on this refinery revenue, so this quarter we have seen 180 crores, either from a maize oil extraction or the balance inventory of the edible oil. So going forward, how we will see in the coming quarters this refinery revenue to shape up? And I think we can sustain this 700 crores run rate going forward also, so that we may achieve 2,500 crore top line. What is your thoughts on that one?
Oh, refinery revenue, I think, along with the maize oil extraction, should stay around this level for a year.
Okay. And this 700 crores run rate will also continue in quarterly level, right? So maybe
I'm sorry?
500 to 700 crores overall revenue run rate will continue going forward also, right?
Sure.
Okay, that's all from us. Thank you.
Thank you. The next question is on the line of Dipesh Sancheti from Manya Finance. Please go ahead.
Hi. Hello.
Excuse me, Dipesh. Yes, you there?
Yeah. Am I
Yes,
audible?
please go ahead. Yes, you're audible. Please go ahead.
Yeah. Hello, Kushalji. Now, so my first question was regarding your gold distillery, which you said you have put on hold. Then going forward, now what is the capex which we have in line, and how much of it will affect our? How much of debt will be reduced? Because since we will not be taking any debt for the gold distillery, that's why.
Yes. So see, for now, the company is incurring two capex. One being the maize oil extraction plant at Swaksha Distillery in Kharagpur, for which we have not taken any debt. And the second being 150 KLPD ethanol unit at Bathinda, for which we are yet to take any debt, but we have a sanction of 70 crore loan from SBI, and we will avail that in the coming weeks.
For the 150 KLPD, right?
Yes.
Okay. And what about the biodiesel? For biodiesel also we had taken a debt. So that is in line? I mean,
Yeah. For that, it's already, this was done, I think a few quarters ago. We had availed a debt of 50 crores.
So how much is the total debt right now? And
So,
hello?
for BCL, the long-term debt is around 220 crores, in which I'm also adding the 70 crores, which we will avail. Sorry. In 220, I'm adding the 70 crores, which we will avail. And for Swaksha Distillery, the long-term debt is around 90 crores.
90 crores. And what is the cost of debt on average? Because some of the debt is only for was at around 4%.
Yes. So I think an average cost will be around 6.5, 6% maybe. I don't have the exact number. But out of this 310 crores that I've just listed, 150 crores is under interest subvention, on which the applicable interest after interest subvention is around 4.5.
Okay. And 150 crores. Right. Okay. Just also want to understand what is the ENA prices, and our utilization in distillery for ENA was around 8%. Going forward, where do you see this coming from 8% to what level?
No, so I think latest was around 15%, and we are working towards increasing this every month. we could sense that maybe allocation would be a little low. So we have been trying to increase our ENA sales and not letting any buyer go. So we're hoping to increase this in the coming quarters as well. But while we try to increase it, of course, there will be some pressure to reduce the prices further. So that will remain a challenge.
Hello.
Yes.
Yeah. So what are the ENA prices now in this quarter? What was the average price which we sold at?
I think around 67.
67. And it was completely produced by maize.
No, sometimes maize, sometimes rice, a mix.
Is FCI rice allowed to be used for
No,
ENA?
damaged rice.
Damaged rice. Okay. And what which we procure it?
I'm sorry?
What is the price of the damaged rice which we procured?
Around 25.5.
25.5. Okay. That's good. Okay. And also now in this quarter we saw a little bit of loss on the real estate. Can you just tell me what is the reason of this? And secondly, how much real estate is still to be sold, and how much of that will help come for the debt reduction?
So I think the loss is mainly so there was a big repair that we had to undertake during the monsoons for the infrastructure, the roads inside our colony. The leftover stock, I would say the current market price would be around 18 crores.
18 crores. Okay. Okay. And what are the grain usage in this?
Sorry to interrupt, Dipesh. If you have
Sure,
a follow-up question.
I'll turn the line. No problem.
Yes, please. Thank you. The next question is from the line of Neeta Thakkar from Finstock Investments. Please go ahead.
Hello, can you hear me?
Yes, you're audible. Please go ahead.
Yeah. So my first question is, what pricing trend was seen for DDGS at the quarter, and how strong has the demand been for the same?
So DDGS has been consistent. The prices have been consistent. There is good demand for maize DDGS in the market since, a majority of the distilleries are now producing a mix of rice and maize. Since we're producing a lot of our ENA from maize, we have a higher blend of maize in our DDJ. So we're seeing a strong demand, around 15 to 16 rupees a kg would be the DDGS price.
Okay. And so with ENA, so what factors contributed to the notable spike in the ENA production during this quarter?
See, there was a good demand in the quarter. Usually we see in the winter months that the demand does increase. And of course, as a company, we could foresee that in the future, maybe the allocation for ethanol that we'll get would decrease. So we made a conscious effort to, try and take as many buyers on board for ENA so that in the coming months we build a good relationship and try to increase our ENA volumes even further.
Okay, got it. And so what had cost for a QOQ drop in ethanol volumes?
I mean, this is a slight drop, I think from 55 to 51, which is quite normal. Our ENA volumes increased by even more. So, I mean, our plant can run at the rated capacity, which is both plants are currently running at. Sometimes there's shutdowns for 1 or 2 days. So it's very marginal and it's routine.
Okay, so it's routine, nothing one-off or anything, right?
No.
Okay, thank you.
Thank you. The next question is on the line of Varun Thakkar from Fires Asset Management. Please go ahead.
Hello. Hi, sir.
Yes.
If you could just expand on the maize oil extraction unit business that BCL is getting into and the soft oil refining. What is the TAM for it? Just expand on that part of the business if you could. Thank you.
So maize oil extraction is the extraction of oil that's present in maize. Further soft oil refining is since we had established a biodiesel unit along with it. Since biodiesel prices currently are not viable, so we had made a provision along with the biodiesel unit to install a refinery. Since we've been in the edible oil business for many years, so that we keep some part of it and refine oil and sell it in bulk. So we kept that provision and we're continuing to operate on that.
And what is the addressable market for this, or like, let's say, the serviceable market for this business?
No, there's a huge market. This is bought by, various packages or traders. So this has a big market.
All right. I think I'll just join back in the queue. Thank you.
Thank you. A reminder to all participants, to ask a question, you may press star and 1 on your touchtone telephone. Again, a reminder to all participants, you may press star and 1 on your touchtone telephone to ask a question. The next question is from the line of Neeraj. As an individual investor, please go ahead.
Hello. Thank you for the opportunity. My question is related to the order that we have received for ethanol. So currently we do around 50,000 kiloliters of ethanol per quarter and around 10 to 12,000 kiloliter of ENA per quarter. And once the 150 KLPD distillery comes online in quarter 4, our ethanol capacity would be around 65,000 kiloliters per quarter. But the order that we have received from the OMCs is like 107,000 kiloliter for the entire year. So roughly that is 30,000 kiloliter per quarter. So that leaves a gap of around 35,000 kiloliters of unutilized capacity for ethanol. So just wanted to understand that how much of this 35,000 kiloliter of capacity can you port over to ENA? Because right now we are only doing 10 to 12,000 kiloliters of ENA per quarter. So how much of your ethanol capacity is fungible? That means it can be used to produce ENA, and like from 10 to 12,000 kiloliter of ENA, how much can you increase it further to compensate for around 30,000 or 35,000 kiloliter of loss of ENA? Ethanol.
Both at BCL and at Soksha Distillery, we have 200 KLPD each production capacity of ENA. And yes, as you've rightly mentioned, allocations for ethanol have been lower than expectations. And with the new capacity coming in, unfortunately, we didn't have the CTO in hand, so we were not able to participate for the newer capacity that came in. We will have to try and increase our ENA sales in the market. As of yet, I can't comment on what level we can take that to. I think we'll have a greater understanding in the coming months. But yes, we have to price our product very competitively in the market and try to gain as much market share as possible.
Okay, so you do not have an idea as of now that from 10 to 12,000 kiloliters of ENA, like to what level can you increase? Because the unutilized capacity of ethanol is going to be massive, around 100,000 kiloliter per year.
We are trying to increase our ENA sales, and I think we'll do that in the coming months. And besides that, there will be another additional cycle from the OMCs also, which we're expecting, and hopefully we'll be able to get some further allocation in that. So we'll try to, to work at as much high capacity utilization as possible. With that said, yes, ENA prices will have to be very competitive.
Okay. And there were news items related to the government allowing ethanol exports. Have you heard anything on the ground from the government?
Ethanol exports, I think that's more of a long-term initiative. For now, that's not created much of demand since Indian ethanol is higher priced as opposed to other countries. So for now, I don't see that creating too much of demand.
Okay. And sir, on the biodiesel side, so when do you expect tenders for that? Any outlook on this? Because our plant is ready for biodiesel, and apart from the maize oil extraction, I think the biodiesel part is laying idle, right?
See, as explained earlier, along with the biodiesel, we had set up a refinery, so we're utilizing that part of it. There was a biodiesel tender that came out last month, but with the prices being around 82 rupees a liter, we didn't feel right to participate in the tender as the prices were not viable. So unless there's an upward revision in the prices, we chose not to participate in the tender.
Okay, I understand. And so my last question. So currently our business model, be it ethanol order book and its prices, ENA regulations, alcohol-related regulations, and biodiesel order book and pricing, it is like it is exposed to government policy, and unfortunately, there are lots of government policy flip-flops. So there's high risk for our business model. So what is your plan to try and reduce the exposure to the government policies? Any comment on that?
See, ethanol will continue to remain a sector that will be driven by government since it's a petroleum product. And ENA is relatively free market, and demand is increasing in the market. And yes, it's government regulated in terms of permits and licenses and red tape. But beyond that, I think we are working towards increasing our bottling as much as possible. We, as already mentioned in my speech, we have just launched a premium country liquor product in glass bottle whiskey, and in the coming 3-4 weeks, we'll be launching another country liquor product. So we're trying to increase our bottling business as well.
So how has been the initial feedback of your latest products, the bottle products?
I think it's good. I mean, it just launched a month ago, so of course, it takes time. But overall, bottling business has been growing significantly since the past 3 years, and I think the initial responses have been good.
Okay, sir. And any visibility on the land bank that would get freed up after you move from the Sanjat facility?
No. We
Like on the valuation
staying
front?
at the Sanjat facility.
The one in the Bhatinda city.
No, currently we are looking to scrap the unit first. Whatever leftover machinery was there, and post that we'll make a decision.
Okay. Thank you, sir. That's all from my end.
Thank you. The next question is from the line of Majid Ahmed from Pinpoint X Capital. Please go ahead.
Audible, sir?
Yes, please go ahead.
Yes, sir. Thank you for the opportunity. Sir, my first question is, what is the level of unsold real estate inventory that still remains, sir?
Around 18 crores, I mentioned.
Excuse me, Majid, you there?
Yes, sir.
You're not audible,
Yes, I'm
actually.
there.
Oh, yes. Please
Okay.
go ahead.
So my first question is, what is the level of unsold real estate inventory that still remains currently?
Around 18 crores.
Around 18 crores. Got it, sir. And when are we looking to liquidate those, sir?
I mean, it's leftover plots, so they'll take their time. We're not in a rush. Prices have increased significantly, so demand has been a little low, so it will liquidate at its own speed. I can't comment on that.
And secondly, sir, what is the current realization for ENA, sir, currently around? Is it hovering around 65 to 70, or is it like, how do you see the trend and what's the current pricing, sir?
So currently it's around 67 rupees a liter. But in the coming months, I see a downward trend in the prices for now.
Is it primarily due to oversupply, or what could be the possible reasons, sir? Like,
Yeah, there could be usually when closer to March, bottlers start to hold on to less stock because there's a revision in the excise policy on a yearly basis. And also, I expect the supply to go up with ethanol allocations being low. So the other plants that have a dual licensing will look towards selling more ENA. So yes, the supply in the market will also increase.
okay, sir. Sir, are we on track to commence our biodiesel plant, or by December, or when it is going to commence?
No, I just mentioned, the previous person had asked the same question. Biodiesel is ready for commissioning. The tender was out, the prices were unviable, so we decided not to participate in the tender.
So then when can we expect the commissioning?
We'll have to wait for when and if the prices of biodiesel are to improve. But with that being said, as mentioned earlier, we had set up a refinery along with the biodiesel unit, keeping this in mind that we could see that the prices of biodiesel have been decreasing, and we are using that refinery. So it's not that the unit is being idle. The refinery portion of the biodiesel unit is working.
And sir, then how are we now? The debt has also increased. Going forward, what type of debt to EBITDA levels are you going to maintain for FY26 and beyond?
So the debt hasn't increased that much. Some increase was there in the working capital requirement last quarter because we were sitting on a good stock of maize. So I think we're still quite comfortable in terms of debt to EBITDA moving forward. I can't give a specific number as of right now.
What is it? Going forward, do you see, sir, any kind of regulatory pressure or regulatory norms in controlling supply, or any kind of thing that you're seeing currently in the market? Or?
So with the oversupply in ethanol, I think ethanol units will slow down, of course. I don't think many banks will also finance new projects. So ENA is a very heavily regulated business to begin with. So yeah.
Okay, sir. And sir, any guidance or numbers in terms of the margins and also, like, are we going to sustain double-digit margins by this year, or?
No, I've already mentioned that I can't really comment on margins as of today since there's some uncertainty with the low allocation of ethanol. There will be margin pressure going forward with us having to focus more on ENA business and being very price competitive.
Okay, sir. Got it. Thank you, sir, on all the ways.
Thank you. The next question is from the line of Prerna Khandelwal from Analyum Capital. Please go ahead.
Hello, am I audible?
Yes, please go ahead.
Yeah, so hi, this is Prerna from Analyum Capital, and I had like 2-3 questions. The first one is like, can you please elaborate the top line and bottom line numbers over the next 3 years?
No, I don't have any specifics to give for that right now.
Okay, and like the next question is that given India's ethanol capacity has reached sufficiency, so what is the next leg of growth?
As already mentioned, the company will now focus towards ENA business and bottling business.
Okay. Okay, cool. And can you give us some light on promoter buying? Like, how much stake is the management planning to increase?
I can't comment on that, please.
Okay, sure. That's all from my end. Thank you.
Thank you. The next question is from the line of Prarthna from Neo1. Please go ahead.
Hello.
Yes, please go ahead, Prarthna.
Okay, just a couple of questions. First, how much of the ENA produced is used for in-house requirement?
Yes. So our bottling business is currently restricted to our Bathinda unit. And on a monthly basis, we're using about 600 KL of ENA for our in-house bottling as of today.
All right. Next question is, with OMC volume tightening across the sector, how is BCL planning to protect both margins and revenue?
No, we will be focusing on our ENA sales as much as possible. But as mentioned multiple times during this call, there could be a margin pressure on that front, as we'll have to be pricing our product very competitively to increase our volume.
All right. Just one last question. Considering that the ethanol segment is policy linked, what potential risk does management see, and how is it working to safeguard profitability and return?
See, the management was always aware that ethanol is a business that's government policy led. And keeping that in mind, we've taken a lot of initiatives that other companies haven't. We'll be producing 100% of our steam and power requirement from paddy straw, which saves us a lot on fuel costs. Again, the maize oil extraction was an endeavor and to save costs and help increase our margins. So initiatives like that and the flexibility between EN and ethanol also bodes well for us. So all those things are there, and the management has been quite conscious of this for the past years also, not just today. So keeping our production costs low, our expertise in the grain market. So I am quite confident that BCL will still continue to perform, better than our peers at least.
All right. Okay. Thank you. Thank you for taking my question. Thank you.
Thank you. The next question is from the line of Rajesh Agarwal from Property Advisors. Please go ahead.
Hello. Am I audible?
Yes, please go ahead, Rajesh.
Yeah. Thank you. Thank you for the opportunity. See, I was looking at the slide. This is a continuous proclamation, the expertise in grain procurement. Earlier you said that maize prices are 23 per kg. And other players, they are clearly saying landed cost is 20 rupees or at the most 21 rupees. Why there is a mismatch, disconnect? What is the reason? When we have an expertise in grain procurement, 20 to 23, hell of a difference, 15% raw material price difference. Could you please throw some light on it?
See, I can't comment on what others have said, whether they've said something or not. I know I'm present in the market. I know what are the prices for the quality we look to buy. And I will continue to stick with my statement. I don't know who has said what, and I can't comment on that, please. BCL has given, has continued to perform better than our peers in the business, and our procurement plays a huge part in that since the past few quarters as well.
Because previously we heard in the last 2-3 Concalls that we were losing because of the forward contracts. Now I don't think it makes any sense to have any forward contract. When the enough of raw material, maize is in plenty, maize is available in plenty. Even we can see government sites also, nowhere it is there. So I can understand some expenses and all that. When other players are telling we are getting landed cost 20 or 21, it makes a reasonable, thought. 23 by any stretch of imagination, it is just a suggestion to me.
As already mentioned, I am not aware who's commenting whether they're getting at 20 rupees, 21 rupees, where their unit is situated, what kind of quality they're buying. Harvest currently is in MP and Rajasthan. Of course, crop from there's a significant freight to be borne on that crop. And I don't think in this con call earlier I've mentioned that we're doing any forward contracts as of today. I don't think I mentioned that statement. I said the spot prices, and I will stick to that. I think we have a decent amount of expertise in grain procurement. There's a huge difference in the quality that you can buy and what kind of quality people are getting, what kind of recovery they're getting from that. I'm not sure, and I can't comment on that. So I'll again stick to my statement. Asking the question in circles will not change my answer.
Okay. Now, since you told that we'll be relying more on DNA.
Sorry to interrupt, Rajesh. Sorry to interrupt. If you have a follow-up question, please rejoin the queue.
No, one thing is very wrong. You always have Sancheti and Balakrishna. They join immediately, and lot of time is given to them. When we come, then you say join the team. Should I take it that those two, three people are proxy to the management? They take enough of the time. I have been watching it for the last.
Thank you. The next question is from the line of Dipesh Sancheti from Manya Finance. Please go ahead.
Yeah, just a couple of questions. One, what is the viability of biodiesel prices?
No, currently I don't think there's any viability with the current prices, which are around 82 rupees a liter, hence we did not participate in the tender.
Okay, because 82 rupees and the diesel prices are around 95 rupees. So you think that the government can actually push it forward to around 85 or maybe more, where you will find it viable?
No, I think, of course, there is scope, but I can't comment on government policies.
Okay. And so for us, how much it should be viable? As in, at what point we will be participating in these tenders?
See, with the current prices, at least 90 rupees.
90 rupees. Okay. How much of IMFL and PML we are expecting to do in H2, and how much of our ENA which we will produce will be used for self-consumption going forward?
So around 600 KL, as I mentioned already, around monthly in Bathinda is used for self-consumption.
Yeah, I know about the monthly say 600 KL, but as you will be increasing the production of your IMFL, how much do you think that going forward?
IMFL this year, we're not producing any IMFL this year. We're only trying to expand in IMIL this year. And of course, the new products being launched, it takes time. So maybe we are trying to grow, but I don't have an exact number as of today.
Perfect. And okay. And what are FCI rice? If you can just throw some light on it.
I'm sorry?
The unit economics for maize and rice. Maize and when you're producing ethanol from rice, what is the unit economics for you?
So the ethanol being produced from rice is around, what's the price? 23 rupees?
23.2.
23.2. And the price of ethanol is 60 something?
60.32.
So that usually gives us around 450 liters of ethanol per kg. And for maize gives us around 380 liters of ethanol per ton, sorry. Those are the normal standards that are followed in the market.
Okay. Fine. Thank you so much. And all the very best.
Thank you. The next question is on the line of Prerna Khandelwal from Analyam Capital. Please go ahead.
Yeah, so actually I had a follow-up question. I wanted to ask, what is the kind of revenue from bottling business, and by when will it start reflecting in the top line and bottom line?
I mean, it's already being reflected in both top and bottom. And it's mentioned in our presentation, so I think you can refer to that, please.
Okay, and what is the expected margin?
So we don't have a separate margin for our bottling business. It's cumulative within our distillery business.
Okay. And if you could give some visibility on the future growth.
As mentioned just in the last question, I can't give you an exact number. We are trying to grow. We have just launched a new product, and we'll be launching another product. In the past 3 years, I think we've seen at least 15% growth on a yearly basis, and we hope to keep that.
Okay. That's from my side. Thank you.
That was the last question for today's conference. I would now like to hand the conference over to management for the closing comments. Over to you, sir.
Thank you all for joining us for our Concall. If you have any further questions, please feel free to get in touch with our IR advisors at Go India Advisors, and wish you all a pleasant evening. Thank you.
On behalf of Go India Advisors Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.